We're glad to have you back. The economic downturn experienced in Nigeria in 2020 was triggered by a combination of declining oil prices and spillovers from the COVID-19 outbreak, which not only led to a fall in the demand for oil products, but also made the country slip into its worst recession in 5 years. In a swift move to save the economy from dampening impact of the pandemic, federal government borrowed about $5.9 billion in 2020 to tackle the COVID-19 pandemic and implement its budget, procuring a $3.4 billion loan from the International Monetary Fund and about $2.5 billion in local currency from the domestic capital market to support the 2020 budget implementation, among others. With the country's total public debt stock pegged at $84.57 billion as of September 2020 and debt to GDP ratio remaining within the acceptable threshold, experts say the country's increasingly debt profile is worrisome and an unsustainable debt service. We are supposed to be talking to Dr. Bongoadi, but we are still trying to connect with him because he was stuck in traffic. We're supposed to speak to him via phone, but we'll try and see if we can get Dr. Adi to contribute support on this very important topic of discourse. We need his contribution. Well, but we'll quickly move to the exchange and see what's playing out before we'll go back to Dr. Adi when we get signals from his end. I have Paul Uzum joining me live via phone. Mr. Uzum, good day. It's great to have you join us on the phone. Join us on the show.
Yeah, good afternoon.
Yes, what's your assessment of volume of transactions at the exchange, what we've seen in the past month and at the end of the first week in May? How would you compare the figures that came out of the exchange?
Oh, okay. So the market was up. Market gained 0.29%. This reinforcement of the gains that was recorded last Friday. And what we are seeing right now is we're seeing increased activity in the market. We're seeing investors responding to the Q1, that's first quarter 2021 results that were released by companies. So what's happening basically is that investors are going after those stocks that showed strong performance, that shows that despite the economic conditions of the country, that they were able to replicate or improve on what they shone out in the corresponding period for 2020. So banks like Zenith Bank, the Access Bank, that have impressed investors. There's strong demand for such securities, and that's why for those companies that their results were not so impressive, investors are selling off. In all, we saw a improved performance of the market today, and reflected in the portion that against 0.29%.
When we talk about sectors, I think the banking stock seems to be so liquid, the exchange. What about other sectors? Take us through the figures trickling in from all of this end.
Oh, okay, yeah. The banking sector is the most liquid segment of the market. The reason is being that that's where you have most of the blue chip companies in Nigeria. You have you look at stocks like the Zenith Bank, the Guarantee, the Assets, and UBA that on a daily basis represents almost that sector almost like roughly about 50% of the total market volume. Other stocks, other sectors of the market like the industrial goods, the consumer goods, are not very liquid. Just once in a while you see one or two stocks in that sector representing a significant portion of the market. But on any given day, on any typical day, that banking sector, especially within those four stocks I mentioned, the Zenith, the Guarantee, UBA, the Assets, then First Bank, the combination of them usually represent about roughly about 50% of what the market does on a typical day.
And now, if we are to project and see what's happening, even before we project, what about the interest in the fixed income side? Many people are finding bonds and treasury bills attractive at the moment. Are you sure this is not going to affect figures coming from the other side, equity side of the market?
Yes, it has the potential of affecting investment decisions in the equity market. However, the returns in the fixed income market is still not, it has not gotten to a level that would make investors opt for the fixed income segment over the equity market yet. We are still having securities in the market, solid companies, blue chip companies that are still producing as much as 13-14% yield. To take, for instance, a stock like company like Zenith Bank, the yield on it, given its current price today of 23 naira, the rate is over 13%. And so the return in this segment still looks quite higher than what you could get in most physical segments. However, if rates should move up, if rates should adjust further, you will now see investors rebalancing their portfolio, right, trying to reduce their exposure to equities and moving some more funds to the physical segment. But as of now, it has not gotten to that level wherein investors will find the fixed income segment more attractive than returns which they could get from some fundamentally sound blue chip companies, especially stocks like Zenith Bank.
All right, as we move on in the week, it's going to be a holiday, yes, for Ramadan celebration. So what are your projections, your expectations?
The market is still having a spillover. The trading decisions at the moment is still driven by the results that were released just about between 2 weeks ago and last week. So it will drag onto the end of this month, out to the end of month of May. So the existence of the Ramadan celebrations, which is taking place in a few days' time, may not have significant impact on the market. Though we have pockets of investors who will be coming to raise money for Ramadan spending, but that will not be much. That will not be too significant to depress the market.
All right, then let's leave it at that. Equities trader, Planet Capital Limited, Mr. Paul Uzum. Thank you very much for your time. We appreciate you there breaking down the market figures for us and projecting ahead. Thank you and enjoy the rest of your day.